over the last two sessions to start this week off, seen sell-offs followed by attempted recoveries. We saw it on Monday with the S&P testing the 10-period moving average and then rebounding. Today, we went back, tested the trend lines. We tested it on the Dow, on the S&P 500, and on the NASDAQ. We're testing the 10-period moving average and the rising trend line, the lower boundary of the rising wedges that I've been talking about. The market was sharply lower, testing those trend lines, and recovered. And on the S&P, pretty much closed flat. NASDAQ squeaked out a slight gain. Continue to see the weakness on the Russell. The Dow, after being down sharply again, only ended down just under 7 points to close flat. S&P, again, had a sell-off, but it closed flat by the end of the session, closed down about 3 points. NASDAQ, 0.18%. The Russell down 0.37%. The VIX was down almost 1%, again, continuing to hover at that 18 level. The intraday signals are still positive. The S&P 500 here, things are still positive as we're testing the rising trend line, the lower boundary of the bullish falling wedge, the rising wedge. S&P 500 daily, you'll see that in this video. We break the trend line again, we could see signals begin to change. If we bounce, we buy a little bit more time. We had the divergence on indicators intraday, but again, it could define into a larger divergence, as I've been saying, into a larger divergence. Right here, signals are still bullish at this point intraday. I'm showing you this because, again, the trending signals, momentum will flip, and then the trending signals will flip intraday. It can happen before it happens in the daily time frame. So I'm watching this. I'm still bullish here. Now, during the session, momentum here was still hanging in there, but then we rallied and we turned off of the highs for the session. We ended up getting a little bit of red there. So this is momentum, and this is a trend. Again, do we start coming down and breaking the lower boundary of the rising wedge, or do we head back up here to the upper boundary one more time and then come back down? The opinion we're going to go higher, but like I said, if we start breaking down, that could be all she wrote. I'm looking for clues. I can tell you what I think, but we could easily break down just as well earnings or markets get rattled with the tensions in the Middle East, whatever. Again, this tells us we're either going sideways, kind of like what we did over here. We're starting to turn down. So again, I'll be watching closely. And this is really looking at the shorter term swing moves, the short term trend and momentum. Here we started to turn down. Again, just going sideways. Do we have something similar to that, but yet are able to keep the trend bullish? Same thing with the momentum line here. Again, intraday, we've turned bearish. So again, this tells us we're either going sideways or we're going to start going down. Over here, I turned bearish. We just pull back a little bit. We got our little triangle that developed right there. I talked about that at the time. Here, again, momentum line, it turned bearish, back to bullish as the divergence formed. The RSI could see the same thing here. So again, I told you I was looking for a triple divergence in all likelihood. If I'm wrong about going back up and testing the upper boundary, got to break the trend line if we're going to start a reversal immediately. So again, the momentum line turning bearish here, but the trend is still bullish at the moment. The trend line is still holding. Similar situation here. The trend starts flipping intraday. We could see the momentum line begin to break here. The trend signals and the momentum line still bullish, but we're getting warning signs that a top is going to soon develop. Maybe that we go a little bit higher in the upper boundary of the rising wedge and then turn, or again, we could just turn if we start breaking down from the rising trend line, the lower boundary of the rising bearish rising wedge. Again, told you I thought we could see a divergence still develop here in the most recent price action. We had one right here that has kind of given us this kind of sideways move. Watching to see if more signals develop here. Maybe suggest we're topping. You have some signals suggesting momentum is starting to wane here. Could still form a triple divergence on the 60-minute chart. Rule that out. I'll be watching the momentum line. When the momentum line flips here, then again, we can see the shift in momentum. The same is true for the NASDAQ. We don't have the little T for the topping signal. So again, very well could be that we attempt to form a divergence. Momentum line is still bullish here. Told you we could see a little divergence develop in this more recent price action to form a triple negative divergence, which very well could be the case. This little rising wedge from our bounce off the 20 period moving average, as I've been talking about. So a little hard to see. The bars are still green, reflecting the upward momentum, but the momentum line, a little hard to see there. It is still blue. So we'll be watching to see if the rally can continue to form the divergence on the 60-minute chart, or do we start breaking down the signals right now. Daily time frame still bullish. And I'm starting to shift there at the momentum line. Intraday, again, they're going sideways, going down. Right now we've been kind of going sideways since we filled the gap on NASDAQ. Please support the channel with the link directly below that allows me to be able to provide you this information. Chart, you like the indicators, please let me know that by supporting the channel. If you could take a moment to do that, I would really appreciate it. Need your help in order to make it work. Please consider partnering with me, supporting the channel today. We'll take you to a secured site and you can donate any amount you want. Thank you for your consideration for that. I'd encourage you to watch this video all the way through. Later in the video, I'll be talking about the dollar and the 10-year yield, how back to a positive correlation with the S&P 500. When they start to turn, we will likely see a volatility return on the S&P 500. Important information. You might want to watch it. After getting death crosses with the 50 and the 200 on the dollar here, the 10-year, we're testing the 200 period moving averages. And here is the 10-year, and I'll be talking about that at the end of the video. I've been talking about the rally on the S&P to my target level of 5750 to 6,000. We're in that window right now. I'm watching the VIX very closely. The VIX here, we're in that window, in that target level from the resistance in the monthly time frame on the S&P. We've seen the 50 get back above the 200 here. Again, the 50 directly below, we're still above it here. Going to be watching to see if volatility returns, or do we break the 50 and go back to the 200 for a test in the lower band. We have wedges. Are they going to break down a little bit more time and go up and hit the upper boundary of the rising wedges on NASDAQ, S&P, and the Dow? We'll be watching. I'll be talking about the rising wedges in the video. But again, we're holding above that 50, and the 50 is holding above the 200. That's a bad news for the S&P 500. So that changes. And again, 50 gets above the 200, volatility follows. When the S&P, or when the VIX holds above the 50, then again, bad things start happening on the S&P 500. Paying attention. Again, we got the volatility over here. We had the July sell-off. We had the volatility over here. We had the August sell-off down to the September low. The fact that the 50 is remaining above the 200, again, could be suggesting a reversal rather than just a pullback, an overall topping process. So a topping process followed by a reversal. I digress. Back to the rising wedges. Here it again. It is on the Dow, again, trying to bounce off that trend line. Tried to drop below the 10 period, ended up closing just above it. Notice we hit the upper Bollinger Bands there and turned off of them. If we try to rally up towards that upper boundary, do we get a lower high? Do we get a higher high? Or do we try to break the trend line here? That would be extremely bearish. And then the S&P has the same pattern. These are going back to the August low. Again, S&P testing the 10 period. We tested it. We moved off of it. The Dow did not. The Dow closed near the 10 on Monday. The S&P moved off of it, got a candle of indecision, turned down today and tested the 10, came down to the trend line. And again, here we are trying to get a bounce. We have a little divergence here. Could evolve into a larger divergence. We'll see what happens. MACD tried to turn down today and the signal line to roll over. It failed to do it. We have a reading on the histogram of 1.62. So again, the MACD line is just above the signal line. Still may get a bearish cross. So what I'm watching is, do we start breaking down from the trend line? That would be bearish. And by the way, when we start taking out the 10 and 20 period, you want to be watching the horizontal level of support. Again, we take this level out, that would be extremely bearish. This is where our triangle formed at that key level of support. We do have a possible little tiny head and shoulders. If that is the case, if we come down here and try to bounce and then end up failing, that is certainly a possibility. But we'll be watching. Do we break down from the rising wedge immediately, or do we try to bounce and go up here? We'll see which way it plays out. Now, we're trying to bounce. Again, same thing with the Dow. Do we break down immediately, or do we bounce off these levels? Right now we're trying to bounce. We're bouncing off the cloud. We're trying to bounce off the trend line. We're bouncing off the 10 period moving average. We could still go higher, get a triple divergence on the 60-minute chart, NASDAQ can form a divergence, which it has not yet, surrounding the gap fill. That's still possible, but you break these trend lines, that's going to do technical damage. You take out the 10-period moving average, you get momentum starting to turn bearish in the daily time frame, then forget it. We'll be breaking a trend line with momentum turning back to bearish. So again, we see that happen immediately, or do we buy a little bit more time? Right now, we've been trying to bounce. We continue to see the last two sessions this week on the S&P 500, a sell-off, but a bounce off the 10-period moving average. A sell-off, a bounce off the 10-period moving average, the trend line in the cloud. And that's what I'll be looking for is, do we buy a little bit more time, or do we just break down from this level? Now, again, these rising wedges are back from the August low on the Dow and the S&P. We could do that with the NASDAQ. We could take it back from here, and again, it would make the lower boundary down here, and again you can connect these points and it would make the upper boundary up in here. That's still a possibility and may allow us to try to challenge this peak up here. So again, just some things to pay attention to, but I think that from these lows right here to the low right there where we bounced off our 20 and now we're testing it again, we got a really nice looking little rising wedge in the more recent price action from the September low, not from the August low. But I wanted to show you the other rising wedge because that's still a possibility, a larger one. But here we have a smaller one, and again, had a rally today, came back to the 10 the last 2 days, just like the S&P 500, trying to bounce each day. Okay, but again, if our smaller pattern plays out, we could go to the upper boundary here and reach this level, but still make a lower high. And again, I told you, I thought that the peaked over here. I told you if I'm wrong. The reason why I told you why I thought that, again, the trend line in the monthly time frame, in the trend lines in the weekly time frame, the 9 count monthly time frame, and in the weekly time frame, and then also in the daily time frame, we got a 9 count at that very top. I talked about all of this going into that high, and then the very day after we peaked, I told you I believe that that is the peak there. Now, I could be wrong, and if I am, we go a little bit higher. We slam up into that trend line again in the weekly time frame or in the monthly time frame, which, again, the trend lines go just slightly higher because to the right of the chart, the angle of ascension is slightly higher. So, again, I'll be watching that. My guess is we're going to get a lower high. I think we're going to see that here. And, again, then I think we're going to come back down, and I think you're going to sharply sell off, go back and test the August low. So that's what I think is likely going to be the case here. We did get the 13 count in this area here, as I talked about, went a little bit higher, filled the gap, and we could form a divergence right here on the NASDAQ on the 60-minute chart if we try to go up into this upper boundary right here. We'll see if that happens. CD tried to roll over, and then it's just kind of going flatline there, actually. I told you the stochastic had turned back up on S&P and NASDAQ. It's still up on both of them. And again, I'll be watching to see if it rolls over. But again, I think it can to form a divergence right here, just moving above the gap fill at the 20,400 area there. I think we could just move just above that. Now, again, sometimes if we see an immediate breakdown, sometimes NASDAQ diverges from S&P. We had that over here. NASDAQ got a lower high. The S&P got a higher high. I was predicting that would happen because I told you I thought NASDAQ had already peaked. I thought S&P would diverge, and we got this sell-off. NASDAQ dropped nearly 16%. P dropped nearly 10%. Now, again, that could happen if we start to see the trend line break on the S&P 500. The question is, do we buy a little bit more time or not? I wanted to show you these rising wedges. Here it is with momentum. We saw momentum roll over, and we've kind of gone sideways. Do we get a little divergence here in the most recent price action here? Maybe. And I'm watching that upper Bollinger Band. Do we go up to the upper Bollinger Band on the NASDAQ? We didn't do it. We tagged it, but we didn't close above it. Did we go up to it and try to close above it like we did over here? Again, kind of straddling along the line, and then we had this push up here. We had a push up here, and then we kind of just straddled along it. Another push, and we got that 9 count sell signal. We formed the divergence, the rising wedge here, and again slammed up into all those resistance levels in the weekly and the monthly time frame that I talked about at the time. So again, watching this closely here, if we do see a turn down, we could get an ABC move completing. If I'm wrong about this being a lower high, we'll go up and slam up into those other trend lines, which again, I've talked about the alternative scenario at great length and detail. The reason why I think NASDAQ will make a lower high is because oftentimes NASDAQ and S&P diverge. I talked about the smaller diversions here. You could get a larger one. S&P and the Dow, they've made new highs, and the NASDAQ does not. Similar to what I've been talking about with the P and the Russell and the Dow and the transports. Watching momentum. Do we get another little diversions here? And again, surrounding earnings. And again, get volatility going forward. It's a catalyst. Earnings, maybe. In the Middle East, possibly. Happen possibly this week. Next week is the week before the election. Israel's probably going to cut it that close to the election, so it'll probably happen this week. And again, as I've mentioned, right now, Israel, they're celebrating the Feast of Tabernacles, an 8-day holiday feast. Have these outdoor tents, structures, part of the celebration. Maybe they're going to wait until that's over on Wednesday. We see something Wednesday night, Thursday, or going on to the weekend. There was a delay, as I talked about last week. The geopolitical issues will rattle markets. We just simply don't know. Sometimes they do, sometimes they don't. I've talked about this at great length and detail. It does, maybe it doesn't. It's likely that Israel is going to respond and Iran will respond to their response. At least Israel is expecting that. Again, is this going to be something that rattles markets about a regional war? We just don't know. Oil facilities targeted. We're being told that's not going to be the case, but you just never know. And attention to this issue. It's likely going to be this week and could be Wednesday night, Thursday on into the weekend. Feast of Tabernacles ends, the 8-day holiday they're celebrating over there. It ends on Wednesday. See if they wait until past that. There were some delays, as I talked about, in getting preparations. I spoke to you about late last week. Not going to rattle the markets? Maybe. Is it going to be earnings? We've got Tesla after the bell on Thursday. We've got a boatload of S&P earnings this week, next week. Got an election 2 weeks from now. The thing, I want to continue to point this out. Again, Fed officials talking about quarter point cuts now. Another Fed official comes out and says, well, I'm still on board for half a point. Pace of the cuts could be concerning going forward, as I've talked about. It's a concern right now because we got the fake jobs numbers report right before the election, as predicted. Eventually, that's going to be revised downward, and we've seen these dramatic revisions with the jobs numbers. The recession is coming. I think the Fed will continue. They'll probably go with quarter point cuts for a while here in all likelihood. But the pace of the cuts could cause the market to throw a tantrum at some point. So keep that in mind as well. So whatever the catalyst may be or a combination of things, we're watching this very closely, predicting we go back up, fill the gap. We did that the previous Monday, a week and a half ago. And now I'm watching to see, do we get a divergence here? Do we get fill and just start turning? Or am I wrong about a lower high and we go back and we try to move above this peak into the trend line? So we'll be watching to see how it unfolds. Continuing to watch Nvidia. Again, I think it's forming a double top. I think NASDAQ is too, but only with a lower high. Like Bitcoin got to the March peak, it got a lower high that followed. We've got a double top here, very similar to the Bitcoin top in 2021, where you had a peak and then you sold off and you went slightly above this peak right here. Sucks everybody in. Again, you got the short squeeze and then you've got the fake breakout in the longs, and then you get your rug pull. But I do think that is what is happening. We can still go up further, and if we do, that can help the NASDAQ for the short term. Here we are. We had a high here at the 144 area, just above this peak over here at 140 and 140.75. Nvidia continues to rally between 145, 150 or so. That would help NASDAQ go up and hit that upper boundary, and I've talked about Nvidia helping NASDAQ. I think a double top is forming. Now, I was talking about this upper boundary on the Bollinger Band here and this upper boundary of a potential rising wedge. If we do go up there, we'll form a divergence on the hourly chart. Here it is up a little closer again on the daily. Here it is on hourly chart. Again, I've talked about an ABC move predicted this sell-off. Again, this divergence helped me mark the top, predicted the sell-off. I told you after we bottomed out here and bottomed out over here that we would go back and fill this gap at 20,400. We've now done that. We've sold off. You had a little divergence give us that sell-off. Do we get one right here in the most recent price action? That would form a triple negative divergence. That's very, very possible. Again, so watching this, if we go up slightly above this level and get a divergence, but still form a lower high, lower than this peak, or again, wrong about this being the top, we'll go up and slam up into those trend lines and go a little bit higher above this level. We'll be watching to see how it unfolds. Regardless whether a lower high or higher high, I think NASDAQ is forming a double top pattern. MACD turned up here, but it's barely in positive territory. So again, we're going to see if we get the traction. If the rally can continue on Nvidia, NASDAQ will probably make a divergence. We'll see how it unfolds. But like I said, we start seeing a sell-off. Tensions in the Middle East happen sooner rather than later, and we see the trend line start breaking. We don't make it up there, and we start reversing without being able to complete a divergence, but we just get a lower high. So we'll be watching to see how it unfolds. NASDAQ 60-minute chart. Showed you this chart up close on the S&P with a rising wedge. Let me just show you the Bollinger Band up close here. And again, I've talked about the similarities over here. Now, again, that could be the case if we start breaking down. Yeah, my trend line moved. I mean, sometimes on this program, my trend lines, I save it and they move. I'm looking at this upper boundary right here. And again, if we try to bounce off the 10 period, can we make it up there? That's what I'm looking at. You've got versions already here with momentum. Maybe it drags out a little bit longer. With NASDAQ, maybe it does. Said we start breaking the 10, we start breaking the trend line, you start breaking the momentum cloud, or the trending cloud as we saw earlier, all bets are off. Could still buy a little bit more time here. So I'm watching the rising wedge. Again, it could evolve into a larger head and shoulders pattern, and again, take us down to the low 5100 area at the August low. Again, I told you what I think. I think we're going to go back up and hit that upper boundary. If we break the lower boundary, then all bets are off. Already formed a divergence right here on the RSI in the 60-minute time frame. Told you we can form a triple divergence and still come up and hit the upper boundary and then begin to tank. MACD could firm up right here. Right now, it looks like it's trying to. Off has taken us back to the 50 period in the cloud for a test right here, and the MACD's come back to the center line trying to firm up. If it turns up, again, you can form a triple divergence here. We had the one divergence with this peak right here on the MACD and the RSI. Again, I've talked about it looking very similar to what we've had over here and over here and over here. We had a divergence. Here we corrected sideways with my triangle. I talked about that. I told you I thought we'd hold out support. So again, and go down and break the trend line. My guess is we're still going to come up here, but then I think we're going to turn and peak and start to reverse. And we could do that before the week here. The markets get rattled, earnings or with tensions in the Middle East or whatever. See that happen this week. So I told you a divergence very well could form here. That is now played out. Again, my signals continue to be bullish, predicting the rally to new all-time highs, but I'm also predicting it's going to come to a conclusion. I was looking for the NASDAQ to fill that gap. That happened the previous Monday, just over a week ago. I'm looking for a topping process and then for a reversal, sell-off to follow. A really reliable reversal pattern here in the rising wedge. Quickly, I just want to say this. 10-year yield has moved back to a positive correlation with the S&P 500. The S&P in the lower window, the 10-year yield in the upper window. The dollar has done the same thing. Begin to pull back, the S&P will likely pull back with them. The positive correlation is there right now. I've talked about the 10-year yield having a negative correlation. I told you eventually it would turn back to a positive correlation with the S&P 500 as the Fed moved towards cutting rates. We have this surge with yields, another thing to be watching. Hopefully the yields will come back down, the dollar will come back down, S&P 500 will peak. Yields will go back into a positive correlation, already done, longer term with the S&P. Dollar will not. The dollar will eventually come back down, but then broken out and bottomed out, weekly time frame, the dollar will eventually surge. During the financial crisis, the market fell apart and collapsed. You know what went higher? The dollar. So right now, we've seen the breaking of a long-term trend line, not these shorter-term trend lines here, the weekly chart, testing the 200 here on the 10-year. Rejection around the 200 here in the 50-week, then we could see the S&P rally come to a conclusion in the not too distant future. Seeing negative divergences start to form around the 200 period here on the histogram and up here on the RSI. So again, just something to pay attention to, the 10-year. And as it's testing the 200, moving back 200 back to the 50 period, and again, be higher yields for the short term, rattle markets, that could be a possible catalyst. So just something to be paying attention to. But again, look, this long-term trend line from 2020 right here, we had NASDAQ top out on July 10th, and just 2 weeks later, we broke that trend line, and now we're throwing back to the 50. We took out the 50, it's dropped below it here, the 50-week moving average on the 10-year Treasury note yield as NASDAQ topping out in July. So just something to be paying attention to. We're coming back up to those levels. So again, the 50-week moving average here in the cloud, the 200-day moving average there. Again, I'll be watching. Is this something that is a catalyst that starts to rattle markets as we've seen the 10-year rise back up? So we'll see what happens. Now, again, there's all this talk the Fed is not going to be able to cut and everything else to raise rates. And again, recession coming. The Fed is going to have to cut rates to try to stave off a recession. But just something to be aware of, to pay attention to. Could this rattle market short term? Could this be part of the catalyst? Combination of things, but just something to pay attention to. But eventually, they're going to move into a long-term positive correlation, even though the yields have been rising. After the 2022 top, again, we saw a break above this area and we saw the yields rise. The market dropped, but there's been short periods. Even though we're rising, there are periods that have the negative correlation. 2022, the market dropped. We saw the yields rise. It's flipping back to a positive correlation now, and we're seeing that short term here, something to be aware of. And I want to thank #1 Giants fan followers bringing that to my attention about that we're coming back up towards this area where the NASDAQ peaked. That was a great observation. So thank you to the #1 Giants fan. Similar over here, very, very similar over here. Right here is the area where NASDAQ peaked. And again, we're coming back up there. But same thing, we're seeing this parabolic move back up to the 200 on the dollar. S&P has moved back into a positive correlation. And again, after we got the rate cut from the Fed, we began to see this breakout of the bullish falling wedge. But we know the dollar has broken out over here on the weekly chart, and this whole thing was a back test to form this bullish falling wedge. And now we have this big surge. Again, the dollar was likely going to pull back, and when it does, the 10-year yield and the dollar S&P will likely top and begin to reverse here. I think the dollar has bottomed. I think it will set up a higher low and eventually go higher. Quickly on the monthly chart, we're bouncing out the 50-month moving average, horizontal support on the dollar. Eventually, I think we come up to the upper end of this channel. The dollar will probably pull back. I think the 50-month moving average is going to hold as support, and the 200-week moving average. Dollar's had this amazing run the last several weeks ever since the Fed cut rates, but look at what happened. We had this trend line. We broke, well, I didn't draw that very straight, did I? We broke the trend line right here. We broke out. And we back tested it. We came down to horizontal support, the support zone from this low to this low, and our 200-week moving average. We slightly violated that, hit that 50-month moving average, and we bounced off the 200-week, and we bounced off the 50-month. So again, in order for S&P to go lower, if the negative correlation returns, which it's going to, the dollar would have to collapse below the 200-week moving average and the 50-month moving average. The bullish divergence formed here. I think the dollar's bottoming out. I think when it pulls back, I think it will get a higher low. We're coming up right up to the broken trend line right here. Actually, I think we're going to go above that level, redefine the trend line at the 200. This is a problem for the stock market because, again, and a problem for Bitcoin. With Bitcoin, 21, NASDAQ and Bitcoin peaked. He did in early 2022, but we had the breakout of this area. The dollar rose, and NASDAQ and Bitcoin tanked. Actually, right after that, the S&P peaked, diverging with NASDAQ.